From disruptive innovators to visionary investors. From founder journeys to capital challenges. We delve into the passion, the perseverance, and the pivotal wins of those building enterprises that go beyond profit, of those shaping the future of inclusive growth in India. We uncover the stories behind the ideas, the trade-offs that rarely make it to the headlines, and the mindset it takes to turn purpose into practice. Impact in Motion, a podcast series presented by NSRCEL. Your host for the series is Nachiket Kulkarni. Most recently, Nachiket led the social enterprise vertical, Impact Orbit at NSRCEL. Our guests for this episode are Eric Savage, and Dr. Randhir Mishra.
Good afternoon, Eric, and good afternoon, Randhir. Thank you so much for making your time and commute all the way around, because I know you guys probably live in different corners of Bangalore, and to come down here on a Friday afternoon from your busy schedule. So thank you so much for joining us. And I look forward to talking a lot of fun stuff with respect to fundraising for social enterprises today. It's an elephant in the room. In any room you go in the impact sector. But just to give you a context as to how we have started and how we got the idea and why we're doing this today, right? If you look at a lot of the long-form content that's out there with respect to entrepreneurship, I think the hard truths are very rarely put out there, right? And more so for the impact sector. At NSRCEL, while we have a lot of, I would say, such hard truths delivered in our closed room sessions with the entrepreneurs, we want to put certain bold things out there in the media. And I think you both represent different spectrums in your own way to actually put a lot of insights and give a lot of insights about what's happening in the funding ecosystem for social enterprises. So that's the context, and I believe, and I look forward to going really in depth. But before we do so, I would want to sort of put out an icebreaker question here. What brought you to the intersection of finance and impact, Eric?
Yeah, so I did mainstream finance for a long time at Salomon Brothers and Citigroup, and I was in New York at the beginning and then in Hong Kong for a long time. And I was fortunate, I was in Hong Kong from 94 to 2006, and so the markets were growing like crazy. I got to work on a lot of really cool stuff. I worked on the financing of the SkyTrain in Bangkok, on one of the first IPOs out of China, on a 100-year bond out of Korea, a number of really large privatizations. And so that was all fun, but there was always something like eating at me inside, thinking that I needed to do something more meaningful and impactful. And candidly, I felt that the work I was doing, while challenging and important, that I was very replaceable, and even that my firm was very replaceable. And so at Citigroup, I think we did really good work, but Goldman and Credit Suisse and others were, breathing down our neck trying to do the same work, and they were also very good at it. And certainly I felt I was very replaceable, and when I left, I found out indeed I was really replaceable. But I grew up with, with parents who talked a lot about and taught us to really that what you should do in life is help others as much as you can, and specifically help people who needed the most help. And so I really feel that I should, do whatever I can to help those who need it most, which are, kind of low-income people. And so I really was looking to figure out how can I take the finance experience that I had and apply it to somewhere at scale to help a large number of low-income people. And then through some serendipity, as a career transition, I went and spent a year at the Kennedy School at Harvard. They have a midlife crisis program.
Yes.
And so I did that 1-year master's, and through my professor, Guy Stewart, got introduced to people at Unitus Labs. They had a team on the ground in India that was doing consulting in the microfinance space, and they had the idea to start an impact investment firm, and we, kind of a first of its kind impact investment bank that was trying to deploy capital into companies that helped low-income people. And so that fit really well with what I wanted to do, and fortunately they thought I was a good fit for them. And so I moved out here to put a business plan together for that company and, help raise a seed capital round and run the company. And I was back in 2007, so it's been 18 years on.
Amazing. I think before I go to Randhir, you mentioned there was an influence, like your parents played a huge part in sort of probably defining this journey, right? Like, can you illustrate a bit more about where childhood was and how did it all actually play a part?
Yeah, so I think my parents themselves were always very civically active in our I grew up in Toledo, Ohio, in the U.S., and they were involved in a number of things. They've been involved in like revitalizing the downtown area of the city and building parks and stuff that helped not their neighborhood but lower income neighborhoods, and we're also very civically involved in running hospitals and the universities and a number of charitable things as well. And I grew up Catholic Christian, and when you hear the Bible, there's always this, what you do for the least of my brothers, you do unto me. And those thoughts, I think, really resonated with me, and drove what I thought was important and what I find fun and brings joy to me.
Great. I think, we've seen with a lot of thought leaders that, I would say childhood and the way, that's sort of shaped up by parents and things around you plays a huge part in driving careers. Randhir, over to you. What is drawing you in the intersection of finance and impact?
So for me, the journey was actually quite the other end. So just getting into doing things and then figuring out how the hell do I do it, right? So the money concerns came much later, as against just finding a priority and finding a calling on some of these parts, right?
You were brought in Bangalore?
No, I have a very varied background. I have done my schooling in 10 different places around the country. And I have spent a year or more in 20 different places around the world. Which bulk of it is in India, but quite a few of exciting experiences globally as well. And in fact, one of the primary driver for me in terms of getting drawn into this whole social impact space was long ago as a part of our ISEC member. I had attended a workshop in Hungary where it's
a very vibrant community,
yes,
right, ISEC?
Yes. And some of the things that some of the experts came and talk about, the power of one and, the impact that a simple idea can create, were really something at that point in time, much younger, made a lot of sense. That shaped and that kind of kept me closer to the idea of doing things which are, socially impactfl. And then being in the academics after doing my PhD from the same IIM Bangalore itself, and involved in the education space, brought it again very simply to say that, listen, even a place like IIM Bangalore is naturally drawn to the people who have the exposure, who have the resources. But the maximum impact that a place like IIM Bangalore would create is the people who they cannot reach to. That is changing now. There is a lot of support that has come in. So that kind of gave me a very good idea on the value of impact, thinking of impact, and more than anything else, your ability to do it.
Okay.
Right? More and more as you saw the privilege of your batch guys reaching positions and doing great things, and they come back to you and say that I am happy to help or support something, then you begin to understand, that is something. So that led to the part of where Unnati came into being. That is the first of the listed not-for-profit in the country in the Social Stock Exchange, or SSE, as we relate to it. And my role has been very simply about bringing a bit of an organization into what we were doing separately under a trust, and trying to make sure that our story is consistent. And that has certainly been what my story of impact has been.
Good serendipities. Eric, let's start with you, right? You've seen so many ventures coming to you. You have supported them in fundraising, albeit at a later stage. We see at NSRCEL a lot more ventures coming in the early stage. And we see the journey as to where they are, and in most cases, even at the end of incubation, they're probably not ready to be referred to a Unitus, right? In your opinion, and we always hear stories about how difficult fundraising is for a social enterprise compared to, any other commercial enterprise. Do you agree with that statement? And yes or no, why so?
Yes, fundraising is challenging for sure. And I think fundraising is challenging. People always ask, is the problem on the investor side or on the company side? And I think it's that by nature, what investors are looking for, whether they be mainstream investors or impact investors, is just a really high bar. What mainstream investors and impact investors are looking at, I would say generally they're looking for four things. They want a fantastic founder and team, senior team at the organization. They want a really large addressable market. And then these investors are all looking to generate a 25% plus IRR on their investment. And the fourth thing is they're looking to exit that investment, generally in 5, 6, 7 years maximum. So doing all four of those things is a really small percentage of businesses, whether those are impact businesses or not. Less than 1% of all companies achieve venture or private equity funding. So many probably aren't even looking for it, but it's just really difficult to achieve. And those financial thresholds are very similar between impact investors and mainstream investors.
I read somewhere, I think your report, $34 billion has come in since 2010 as venture capital in the impact investment sector. But if you look at commercial investment in all startups, just 3 years, in the last 3 years, we've hit that number, right? So it's, 2% maybe, if I go in depth and define core impact, then it would be 2%. But if I include, like, let's say a Blue Smart kind of an example, or a Vedantu kind of an example, and I cover that in impact, we're still at 10%. Why is that so?
I think it's because the impact businesses are, for the most part, are serving low-income consumers. And if you look at the total amount of money they're spending versus the middle class and the wealthy classes, it's a small percentage of the overall market. It's more challenging to set up a business that successfully can target those low-income segments than it is to serve wealthier segments. So Randhir and I were talking off camera earlier, I was saying that we've done Unitus Capital and UC Power. We've done a lot less in specifically education and healthcare than we'd like to. Of course, those are tremendously impactful segments, but you don't have too many entrepreneurs who have successfully set up businesses targeting low-income populations in education and healthcare. You had a few years ago lots of ed tech companies that were serving the upper middle class and upper class that raised many billions of dollars to do that, but you didn't have many that were doing that for low-income populations. And so I think that's part of the reason. If you look at the overall investor universe, the impact investment is tiny. So collectively, the impact investment firms in India would manage, $1 billion, a little bit more than that. It's not, or even across funds, it would be 3, 4, 5 billion. It's nothing compared to how much there are lots of single funds that are that size or larger. And so when you're targeting those markets, you generally target the larger ones. I should add that there is a spectrum. So we work in the impact investment sector that's looking to deliver to maximize financial returns for investors by investing in impactful companies. There are investment funds that do not target as high returns, that target lower returns. There are people like Acumen, which has been around for a very long time, or Upaya, which is an India-focused fund that do fantastic work. But that's a really small pool of capital.
And then LPs are probably an arm of principle, right?
Correct. Correct. So you can target them, and if you match up, that's fabulous. They're wonderful people, but the amount of capital they raise has been really small part of the overall market.
I'll take this to the non-profit world, Randhir. I feel like today, at least after the CSR laws came in, today that industry is around 28,000 crores. We probably have around 40,000 or 30,000 active non-profits, maybe 1 million on paper. If I just take the CSR bucket itself, it should actually be sufficient to solve that need. But our not-profit founders also complain the same thing, right? That fundraising is very difficult. What's your take on this? What have you seen in your journey as a mentor and also as a director at Unnati? Why is it so difficult to fundraise for nonprofits?
See, the whole idea of accessing fund for any not-profit or non-for-profit entities is very clearly dependent on one single part, and that is, does my story, does my work, does my efforts and outcomes that I bring to the table align with what you are thinking of? Many a times we find some of the mature people and mostly family houses and individual HNIs much easier to convince and much more willing to hear your story and be part of your journey.
And that's off late more, right?
Right. No, from the beginning as well. Though there were a few of the if you look at some of the funding trust like Swarajji Trust or more recent Bill Melinda Gates and all kind of a thing, they have very clear buckets that they have defined what they are willing to put money on. And unless you fall in that kind of a bucket, there will be very limited, idea there for you to go through. And many a time there are a few of their own mature entities that they have worked with for a while, and they are happy to work with them, right? And the CSR fund as well, a very similar kind of a story unfolds. As the size of the CSR fund for any organization grows, they see very clearly that creating a foundation of their own, right? I was a part of IT company not mentioned in the most, happy place, Satyam, when it was just kind of finding its momentum and just before all of the thing came crumbling down. And I remember that there was one discussion where key leaders were sitting and we saw that the quantum of money that was getting into the CSR pool was very huge. And Bairaju, the family, was actually very keen that, they were themselves doing some. And they very quickly created a bridge between Satyam and their construction business, CSR, into this, right? So many a time you see that the idea of a not-for-profit in the country today is still very individual driven. One or two or a few people who have come together.
You mean from the entrepreneur side or from the founder side?
From the entrepreneur side, right? And from the side of the capital piece in there, they are again semi-corporatized. I won't call it completely corporatized, but semi-corporatized. Why? Because big funds have that. Smaller funds, it's again a challenge for bigger guys to go and say, how many CSR do I want to really convince? And again, they will have their own ideas of that I will put money for this and I will put money for that. And there again, there are some preferred, sons and some discarded ones there. Right? So those are some of the structural thinking challenges. But one part that I see changing or was changing till some of the major political changes happen around the globe, not worth opening that discussion. There was a massive move towards saying that impact is not a choice.
All right.
That impact has to be built into the organization's purpose, organization goal, right? That whole Larry Finn set of letters talking about specifically that. And from there, they started seeing that the impact that they claim that they are making versus the real impact that is happening is a big gap. So I feel these are some of the factors that make the CSR feel more in control if they can run the initiatives or projects or actions on their own, having people running them. Many a times it doesn't even get registered as a social enterprise independently. But for us, it has always been that the people that we knew in Unnati, and because Unnati is an offset of a earlier trust, which was doing a lot of work in the, the music space, in the youth space, and people were willing to support. And so some of the early years for us was very clear, you raise money, whatever falls short, we will give you from the trust.
Okay.
And that basically gave us the scale. Today we are talking about 200,000 youth transformation at Unnati.
Okay.
And, and that is...
So your trusted you, right? Yeah. Okay, but you think it's like a founder's mental block then? Because today the numbers seem to be matching, at least in terms of, source of capital versus what needs to go into the enterprises. Is that, I don't know, can I rephrase it as, what's the biggest myth that, let's say, entrepreneurs think about fundraising?
So I will give you one simple example of, let's say, the public sector bank, SBI's fund or foundation, basically, social fund, social support budget that they have.
CSR, SBI Foundation.
Right? Yeah. So they will basically have a very simple thing into that. Don't come to us with some other government entities work that we are not willing to fund. Very understandable in that particular side. But then they will come into saying that bring me a project which is a 10 crore, 15 crore, 20 crore kind of a size, so that it becomes sizable for us to look at. Now, if you really look at the entities around today, there will be very few who can actually go and put forth trust, capability, vision, access to run a 10 crore project, right? It's very proliferated and a very distributed kind of a market in that sort of a sense there. So what you say makes sense and things will start moving. And, when we talk about technology play in this, some of that will also start getting enabled in there. But yes, the match has to happen. It hasn't happened yet. And I think there are a lot of things that will start falling in place.
All right, Eric, let's start with, let's go into the depth of what funding options actually exist, right? Cutting down to the basics, right? Equity, debt, blended finance, philanthropy. In your experience of looking at probably, when you work with 200 ventures, you've probably seen 1,000-odd ventures. What works at what stages, right? Especially for a for-profit impact venture.
So I think that, as you rightly said, different products are more appropriate for different ventures. So as I've already said earlier, equity is really for companies that can deliver exceptionally high returns or have to promise to do so. So if you're a business that can generate a 25 to 30% plus IRR, then equity is a good option for you, as long as you can convince the investor that you're going to be able to provide an exit for them at that point in time. And equity can be raised in very small amounts in a crore or two, or it can be raised in extraordinary large amounts, many thousands of crores. And there's some investors who are seed and angel investors, and there are some who are much later stage. Debt is appropriate for people who can pay it back, and so it's for people who have cash flows within the business. If you're not profitable, it's typically challenging to raise debt, not impossible. But debt is more appropriate for companies that have strong cash flows. Of course, it's even easier if you have some security that you can provide to the lenders to be able to get debt. Blended finance is a smaller part of the market. It's not a big product in the market. Both the equity debt markets are massive, beyond the scope of any company. Doesn't have to worry about how big they are because they're so large. The blended finance market is much more nascent. It's very helpful if a company is near the stage where they'd be able to otherwise successfully raise equity or debt, but need a little bit of a boost there that you might have it. I mean, blended finance can be structured in many ways, but if you take a first loss, guarantee or something like that, or take a junior tranche of a securitization or other transaction, then blended finance can work. And philanthropy is really for businesses that are structured as nonprofits, and in many cases there are market solutions that are these impact businesses, is social enterprises that do fantastic work, and those are the kind of companies that we invest in and raise capital for. But there are other sectors that are much more challenging.
A good example for Unnati, when NSDC first came, if you remember, they were more of a financing arm than what they have become now. So they were at one time sitting on 60,000 crore of money to
NSDC?
Yeah.
What point of time was this?
Oh, this is, I'm talking about in the 2010, 11,
Okay.
that kind of time, right? So it was more of a financial institution than that. And when the skill ministry came, they basically removed all of that access.
They should have become an LP to some skilling impact fund actually. Yeah.
So there was, when they started this whole journey of saying that we want to be your partner as a NSDC, and they would give you primarily debt to run, to grow your business or to basis of your plan. And when they came to Unnati, we were among the first to talk about a partnership and all of that. And they came and gave us a very nice part of saying that we will give you, I think it was what, 35 or 40 crores kind of, over a period of time, debt at some very, I think it was 4 or 5% kind of interest. Now, there were three things that they asked in return for that. One, they asked for collaterals, right? Second, they asked for personal guarantees. And third, they asked for payment schedule, right? We couldn't give any of them.
Yeah.
Yeah.
Was it because you were a non-profit or because you were early stage?
No, because we didn't have any revenue.
Yeah.
We were barely collecting from 5%, 10% of the participants of our program a bare minimum fee.
Yeah.
Right? And
At least to cover your costs.
Not at all.
Not even corporate costs, just like, let's say the venue cost.
So what we are talking about is that our cost has typically been around 10,000 to 12,000 per candidate.
Okay.
We would charge them, we would claim to charge 5,000 rupees from them. We will get 5% of them paying less than 3,000.
Right.
So what it covers, I don't know.
Okay.
Possibly, one of the teachers' conveyance allowance in that sort of a manner. So in that kind of context, we know very clearly that the debt will not really work in there, right? And equity in a not-for-profit is, it's not really a feasible thing. So at the end, it is just simple thing that we need only philanthropists, right?
Right. So I think sticking to that, right? It's obvious that philanthropy is a source of capital for non-profits. But then it's not that non-profit doesn't do innovation. It's not like non-profits don't develop products. And I debate this all the time. Even yesterday, we were talking to somebody in the industry, because NSRCEL is a Section 8 non-profit. And I've always advocated to sort of having, let's say, designing of a cap table for a non-profit itself, like how a for-profit founder has to do it. Like, I would want to use equity for building my labs, sort of building my next product, and probably use a grant for building my next R&D vehicle, and for my supply chain financing, I would take debt. Have you seen an equivalent of a very smart cap table design, if you will, to differentiate sources of capital in the nonprofit space and use it for XYZ application?
I haven't actually come across anything like that. In the slim. So some of the education entity who are actually very clear that they want fee to be paid for the programs that they run, right? Nudge Foundation, for instance, has some of these kind of paid programs that happens in there. It might make sense for somebody like that to create this. For us, the challenge is still that, when we basically get a check into our account, we have to reach out to them separately into saying that, is it okay if I use your donation for corpus? We want to build a bit of a corpus. Is it okay if we use your fund for general admin expenses? Because what happens is that when we go to them, we sell them outcomes. We say that you are giving me 12,000 rupees, that means one youth will be brought from wherever they are.
The social impact outcome.
Yeah, so basically they will become self-sustained in that sort of a manner. But then coming to the other part that you were talking about, that, it's not that we are only doing some charity or we are only doing some, non-value added work or the work that cannot really be translated into a value contribution. Because today I know that we have added close to about 20,000 skills facilitators into the industry at no cost of theirs. Right. Now, I don't think we included that in our impact numbers in there. Now, if somebody comes to us and says that we want to create an innovation fund for making this process more exciting, creating an IP out of it, creating a value out of it, and these guys are anyway going to, have more of an upgrade of their skills and therefore should be willing to pay for a program like that, then some of the things that you're talking about starts to make sense.
Okay.
And what I was saying is that it depends on the stage of the organization.
Okay.
At this point in time, I am supporting an organization in possibly 1 year, 2 year, 3 year kind of a time frame, right? And that is all I am interested in, and that is what he will have his timeline and say I am going to support there. From there, if it achieves spectacular, massive commercial success, well done.
Yeah. Okay. Because we at NSRCEL we just begin our investing journey, right? Otherwise, we are a Section 8, we are a grant pass-through organization, and some of our early ventures in the impact space, while we didn't know they were impact then because we didn't have like a focused program and stuff. Some are really cool examples like a Go Desi and similar ones. We've given the initial philanthropic check of maybe a 10 lakh or a 20 lakh. They have then gone on to an impact investor, and eventually, I think they've just raised $8 or $10 million right now, right, from commercial investors. So, Eric, do you see such journeys as well, where people have transitioned from initial philanthropic donor funds to raising commercial capital and coming to Unitus for doing so?
Yes, we have. We used to see that a lot in our early days because we were working at that time primarily in the microfinance sector. And what are now many of the leading microfinance companies in the country started off as nonprofit.
Yeah, like a Vandan example, right?
Yeah, so Vandan is a good example. SKS, which was one of the pioneering microfinance company, was another example. And like many of the earlier ones, Spandana and many others started off as nonprofits. And then they at some point they couldn't continue to grow because they didn't have enough capital. They couldn't attract enough donations. And so they decided to become for-profit companies so that they could raise equity capital. And they'd figured out the business model was profitable enough that they could raise equity capital. And they did that so they could raise equity capital, leverage that with money from the banks. The banks were encouraged to lend to them through the priority sector lending. So there was this set up avenue of capital to support them. And so you saw what at that time seemed like sizable entities transfer to for-profit companies and then become massively larger. And now many of them are publicly traded companies.
But these are examples who transition from the non-profit to the private limited, right?
Yes.
What I'm asking is, a lot of today's startups are private limited. We provide the first institutional check, which is a grant, right?
Yes.
I'm looking at those examples. Like if you look at Ether recently, and there was so many social media posts that, hey, IIM Madras was the first incubator, 10 lakhs, 15 lakhs grant, just that it was a convertible, and they just stayed in and they didn't exit till today, and they made whatever. So I'm trying to ask if you've seen those examples where, let's say, microfinance or climate tech or whatever, where you've seen initial, let's say the first few checks as a grant, even in a private limited, and then gone on to raise commercial capital later.
Yes, that did happen. Some of the microfinance companies, like Jana Lakshmi, like I believe Ujivan, started off as for-profit companies, and they did take grants in the early days. Some took grants from Unitus, some took it from the Dell Foundation, and many others. And then they went on to raise equity capital, sometimes from sister organizations of those or from other people, and went on to be successful. And when you're in your early days, it can be helpful. For example, even with our fund, we have a big institutional investor who's backed us. They see that a fund at our size, the economics aren't amazing, and so they'll give us support to do other things, like we take impact measurement very seriously. That takes significant resources, and so we're hiring an outside firm, Bluemark, to audit the impact that we do. that costs money. And so this limited partner in our fund is funding that work that they do. They call this technical assistance grants that are given alongside equity sometimes, or sometimes given independently. So yeah, we've seen that be successful. You can debate, should that money come in as equity?
Because it's an opportunity cost loss is what it means.
Correct. I mean, if you're giving a grant instead of giving equity, you're missing all the upside. And so I think it's your decision what you want to do. Of course, the other side has to agree to it as well.
Makes sense.
Yeah. I mean, when SKS was starting, Mike Murray, who was the founder of Unitus, he went to Vikram Akula, the founder, and Vikram was actually giving loans off credit cards at that point because he just had no access to capital. Mike asked him how much money this was. I forget what it was, but it was in the tens of thousands of dollars. And Mike wrote him a check on the spot so that he wouldn't default on his debt obligations and have his home taken away and whatnot. So people do that to say, Mike could have put that in as equity. It would have gone up 100 times if he did. It didn't. And so I don't think Mike loses sleep over it.
Absolutely. I mean, right question for us as well, right? Like the primary purpose there is not to make that financial return. If it happens, it's well and good. But I think now we've also waken up and said, hey, why not have, at least by definition, have an instrument that I can make wealth out of. Because there's not much of a tweak that I need to do. I mean, I can still be very founder-focused, founder-first non-profit, and still be able to do that, right? And that's because our mandate is driven by the government and driven by IIM Bangalore, and we want to be that. But I definitely feel that there were certain opportunities missed. But I think we will.
Yeah, I mean, you could structure your grant in a way that it converts to equity, or it could give you the right to participate in a seed equity round, or those kind of things.
We're starting to do all that. All right, we spoke a lot about early stage fundraising, which is, in essence, I would say a lot of unearthing. But then there's a lot more ambiguity in late stage because I would say 10 or 15 years is an early stage for an industry to develop, right? Randhir, you have been involved in advocating the social stock exchange as well, right? But before going into the nuts and bolts of it, what I would want to understand is, and for the audiences, is what was the need for setting up something like a social stock exchange? Because, be it a non-profit or a for-profit, I mean, at least for the for-profits, whatever work Unitus has done, they've taken their companies to main board IPOs, and there are quite a few such examples globally. And from what I've understood, SSC was not framed only for, let's say, a for-profit, right? There was a lot more than just capital to be solved for. So, if you remember what happened in 2013-14, why something like this came up from the regulators, who was behind it, if you want to sort of, cover that for our audiences, that'd be cool.
Oh, it is fairly documented, the whole progress of the social stock exchange from one of the first discussions that happened. It's almost like a parallel with the success of the stock exchange as such. NSE being set up and the access that it created, the number of listings that happened. And in some way, the catalyst that it acted in terms of making the industry mature, making the industry responsible, strengthening the governance piece of the organizations, the disclosures, transparency. All of that was basically where, we are talking about bringing structure to the unorganized sector. But here we are talking about rather organized sector, very organized sector, which is a not-for-profit and a social enterprise, so to say. So, and it was an amazing thing on the push that actually came from a lot of interested party, including NSE, BSE, SEBI, in making it happen. And the paper came together, the committee came together, and very quickly, in the context of organizations coming out of policies in the government, it was really a quick turnaround. And somewhere around 22 is when we began to hear that it is actually going to happen, right? And for us, it was news that had come, and we were looking at it for a while. as Unnati into saying that, okay, fine, this is a nice one, and we had no clue of what it would do, what it will do. But if it is something to do with social, then Unnati has to be there. That's the primary sort of a driver for us. And the moment it opened its registration, we were not the first to get registered, but among the first few who got themselves registered. And then for a while, there wasn't really much that was happening. But then going a bit more, broader in there, there are something around close to 17 plus social stock exchange around the globe,
Yes.
right?
Yeah.
And
Some active, some not active, some
yeah,
experiments.
primarily, I think around 4 or 5 of them are what is still
Yes.
active, right? So it has not really been a very successful model. But then again, I
think Canada, Jamaica is where they're probably active.
UK has some very
UK does
interesting
have,
models
but
there as well.
not so much in terms of throughput.
Yeah,
Massive failures across Singapore, Hong Kong, Brazil.
correct.
Yeah.
Correct. Means I can tell you the reasons why a social stock exchange will have more chances of failure than success as against any other stock exchange, be it commodities exchange or the carbon exchange for that matter, that has a very different logic to it. But for whoever that has succeeded and whoever that have tried, I don't think they have really found the right mix or the model, and therefore they haven't really gotten into passing a verdict on that yet. Right? They are still waiting to see how the things will shape up. And for us, going through it in the second one was almost a part of telling ourselves that, what could we have done better? What could we have done differently? And more than anything else, like I was telling you before, Unnati with its background, with its, massive support that we have of our patrons, and, massive thanks to all of them. We have had the whole back-end infrastructure that is needed for listing, be it a merchant banker, be it a registrar, be it the legal team. All of them came to us pro bono.
Okay.
Right. So, and for them, it is the same story that we were saying that, hey, listen, we are going to be the first.
Okay.
We want to be the one who helped the first one get listed. Good enough for that sort of story for us to go.
You were also the first to do it twice now.
Oh yes, we are the. I don't know if
How much did you raise on the first one and how much on the second?
So the first one, we basically went with the minimal sort of requirement that was 2 crores that we.
And I think there's an iteration to that now, but it used to be 2 crores then.
Yeah. So, and the second one was 50 lakhs.
Okay.
Right. And there is also the cap of a minimum of 75% fundraise for it to be validated, or you
Correct.
have to return.
Success of the listing, if you will, right?
Listing, so to say. And we basically got overwhelming response for the second one. And the first one, we basically fell short because one of the key donor for us, and they have been supporting us for a long time, they continue to support us, could not get convinced about the value of SSC.
Really? Oh yeah, I mean that's okay. Yeah, that's great. Actually, before sort of going there, can you describe the process itself? Now that you've done it twice, if you can do that, I don't know. Are you used to doing that in 2 or 3 minutes?
No, so it is first and foremost, it is very clearly templatized checkboxes that you have to tick.
Yeah.
In terms of all your disclosures, in terms of all your validations, in terms of your social impact measurements, like what Eric was saying is such an expensive and huge effort. So you need to kind of do that. And I believe that going through this process in itself is a massive learning for any social enterprise. Just as some of the regular venture who come to me asking for, shall I go and get some money for this kind of a venture, or shall I just use my own funds, friends and family? I would tell them that, no, just go and try and convince at least one person who has no affinity for you, but basically is willing to put money for your venture. Why? Because it's a validation, external validation. And external validation is what you get when you go through this process as well. So I always tell people that, hey, listen, go to our website, unnatiblr.org. On the first page itself, you will find the SSC listing tab there. And we have put everything there as editable text, editable documents. All you need to do is include your name in there. So every part of the filings, every part of the documents, every part of what is needed, you will be able to do it, possibly in 2 or 3 days, max. Means more time to get those information from your side than wondering what to do with them. So it's a...
What are the bullet points there, like for the process?
So it's not very different from your regular listing. You have to go through the same red herring prospectus. You have to basically do a fund disclosure document. You have to basically have all the disclosures for the interested parties, the directors, their interest, their close family member interests, their other holdings, etc., in that similar sort of a manner. Some of the affiliations, if you have any strong and prominent ones, then disclosing some of those pieces as well. And then making sure that all your filings with the ROC, with the company registrars and everything is up to date, making sure that you have every dot dotted and every T line in that.
If I understand right, there is a registration process and then there's a listing process, right? So what we are saying now is for...
So you have to go through the complete set of disclosures for your basic registration on the SSC. Right? When you get into the fundraise, there you have to go through an extreme disclosure of the projects. Right? So you basically are talking about the entity disclosures versus your activity disclosures in these two kind of scenario. And therefore, when you talk about activity disclosure, for instance, what has been your track record? How much of what you claim to be doing have you done? What are the third-party endorsements of doing that? All that become relevant, not very different from what you do when you look at the social impact measurement as such. And then there are a lot of pieces relating to your own formation documents, statutes, articles, what is included, what is not included in that sort of a manner. So it is almost like revisiting yourself as you incorporate it and revalidating that you incorporated for the right things, and that is what you are finally making public.
Yeah, now that you say it, like I realize that we're going through the same exercise for NSRCEL, right? We're just beginning to register. We're collecting around 16 odd documents. I'm talking to my finance team, my marketing team, my legal team, and it takes a while, right? But what I've understood and what I've not understood is this. What I've understood is, yes, it's a great introspection exercise, a great self-check exercise in terms of compliances and where you are strategically. What I've not understood is I anyway have access to my donors. They anyway know me. They anyway know our work. And from our prior discussions outside of this, you have probably not discovered any new donor through this process, right? And I believe if there's an exchange that is set up, of course, obviously it is primarily for reporting standards, for impact metrics, for compliance checks. But I would say the primary reason for a market to exist is the transaction. And the transaction here means discovery of new either investors in a for-profits case or donors in a non-profits case. Did you find new donors through your SSC listings?
So for us, the value of SSC listing has been more around finding other stakeholders. Every youth that goes through our program is somebody who's written a check, right? Which is not, I wouldn't say it is a sustainable, self-sustainable model. I don't think it will become a self-sustainable model, the skilling space as such. But very clearly, I know that the people who have gone through an Unnati program have given up on any other ways that they were looking at leading their life to a very responsible. In fact, today itself, in one of my client meeting, I discovered that one of the manager in that organization was a Unnati graduate. right? And that's a big thing for Unnati.
Right.
So it's not just that we are creating gig workers or we are creating front-end retail part or housekeeping. We are actually creating professionals out of that
Right.
kind of.
So you're saying, I mean, you may or may not have discovered new donors through the process, but the government may not have spoken to you if you probably had not gone
Or
through
it
this
would have
process.
taken much longer
longer.
process for us, and which is almost like then it wouldn't have happened, right? For us, the point is that somebody gives us the money, just as Eric has that if somebody is given the money, then there is a timeline to invest it.
Yeah.
Right. For us, if somebody has given us the money, then we have to show them that, hey, listen, we use
Yeah.
this money for this.
Yeah.
Right. And our big challenge was that getting one candidate, or rather the most expensive part of our operation was sourcing the candidate. We were spending almost 40% of our cost in just finding the right candidate to come in. And when I say right candidate, I am saying that we have not rejected any candidate so far. Right? They have chosen to drop out from our program saying, hey, listen, this is too intense. We can't do that. And we are very happy when they do say that.
But do you now sort of put this out there in all your documents saying we have listed on SSC twice? It's a brand value thing right now, is it?
We do.
Okay.
And
Would you do it again? Would you do a listing again?
Means this is the journey that we have gone through so far in terms of the learning. It has given us a lot of input right now, and we are just waiting to see if we will actually be able to open new donor gates through this process.
Correct.
Right? But then remember one particular thing, even in your classical listing, one of the biggest budget besides the cost of your investment banker and merchant banker and your registrar and all of that is the promotion of your IPO to the mass. Right? The marketing of your issue is a massive budget.
Right.
We don't have that kind of a budget. As a social enterprise, if I say that the cost of my capital raise is more than 3%,
Yeah.
I would become unviable.
Yeah.
My admin cost has to be below 5%. Right? That is what makes us even look into the eye of somebody who's writing a check that they know is done and dusted. Right? That is what the ZCZP is all about, right? The zero coupon, zero principle into saying that, hey, listen, give me money. You come to the stock market, you don't get any interest, you won't get your principal back.
Yeah. Yeah.
Thank you so much.
At some level, I do feel that this 3% could be a one-time expense, but I may be wrong because maybe every time we go raise for a new project, it obviously, maybe I don't spend 3%, maybe I spend 2%. But coming to you now, Eric, from what, I mean, Unitus has taken a lot of companies IPO, but it's sort of still a smaller proportion to your portfolio, right? Two things I would probably want you to say. What do you think about the social stock exchange? Does it have any value to an iBanker entity like yours, or even now an equity and a debt fund? And two, then, if yes, or if there is a mature exchange, will capital markets ever be ready to observe social enterprise?
Yeah, so I have a confession. When I first heard the idea of a social stock exchange, I candidly thought it was a really dumb idea. And I heard about it in other geographies first before India started some 8-9 years ago, really looking at it seriously. And candidly, I think I have a good understanding of what dumb ideas are, because really, like having started Unitus Capital as an impact investment bank, that was not a great business idea. I thought we were like a 10 on 10 in terms of bad business ideas, and the social stock exchange is much worse, a 20, 100 on 10 in terms of bad ideas. And the reason that is that creating a good stock exchange is really difficult. The NSE here in India is a fantastic stock exchange, one of the leading ones in the world. Obviously, New York Stock Exchange is is the highest volume of any place in the world. And the key for success as a stock exchange is you need to have a really high volume of activity so that companies can go and then list themselves and raise capital and have a fair value for their shares. So in India last year, there were 320 IPOs, the most of anywhere in the world, more than India and the US together. And so it's a very good exchange where every day there are billions of dollars traded if you include the derivatives contracts, it's like a black roar every day or something.
320 is like main board, SME, and all different types
Correct,
of IPOs
yeah,
put together.
all of them together, correct. And so, but to do it, you need really high trading volume, and then you need good research following from the top, investment banks and brokerages, and then you can do these successful listings. So if you were a successful impact company and you want to do an IPO or a listing, you want to go where the most activity is, not where, say, your friends and the nice people are at the social stock exchange. So as a means of raising capital for successful social enterprises, equity capital, a social stock exchange is a colossally bad idea. But of course, the problem with the social stock exchange isn't what they've done. What they've done is fantastic. It's that they call themselves a social stock exchange. They should call themselves a marketplace or something else. And so it's great that you now have this facility that over time will hopefully build up a lot of trust, and people will know that if you're doing a listing on the social stock exchange, or hopefully called something else, will then be a trustworthy thing, and they know like, oh, we're not delisted there. That gives credibility, and it sounds like from Randhir that's already happening, and that's giving him credibility with the government, and so that's fantastic.
When I speak about this in public forums, and Unitus has done this, and it's possible to deliver impact and returns, people ask me one question, and I'm going to put that question to you.
Okay.
Unitus has shown this in doing this for microfinance and financial inclusion. What's next? Right? If a lot of people, according to sources, tell me that microfinance is not impact investment anymore. What do you say to that? And what would be any other sector that you guys are betting on after this?
Certainly, I would say microfinance is by definition an impact investment, and that you're giving loans to very small loans to individuals, typically women, who aren't served by the banks. And so there's a huge inclusion angle to it, and it's extremely helpful to them. What I would say is true is that the microfinance growth story today is not what it was 10, 15, 20 years ago. The country is pretty well covered for microfinance right now. And so you probably don't want to start a new microfinance company and grow it to be a massive company and expect to do a listing. That's highly unlikely to happen.
So the deal is done, right? That's
that opportunity set is moved on. Now there are many other within financial services. So you have like climate finance, where you're financing electric vehicles, rooftop solar, that kind of thing. It's a massive opportunity. You have affordable housing finance. There's multiple listed affordable housing finance companies, but that's still a very underserved market. That's a huge opportunity. The SME finance market, both secured and unsecured, is a very big growth opportunity that we find very exciting. We've invested in multiple companies in that space. In other niches, you look at agri-finance and other things that are there. And then apart from the financial inclusion story, the other massive opportunity is climate. So there's climate finance, but then there's also the whole energy transition space. We invested recently in a company called Ampere Hour Energy.
Yeah.
They're a BESS company, a battery energy storage systems company. They do they balance the load on those. They do the whole setup, and so you put these batteries next to solar and other renewable facilities so that you can have electricity when the sun's not shining. That's a nascent industry. So they've built the largest facility in the country. They're going to do 3 in the next year that are significantly larger than that. It's a business.
This is through your asset financing through the debt fund, or?
No, this is from our equity fund, from our IIM Bangalore fund. And that's a company that's already profitable. They grew their revenues 4 times last year. They're expecting similar growth this year. They've also done captive facilities for like Amazon and Coca-Cola, and in India, as well as in the Middle East. They're doing an airport in Europe. So there's just a huge growth opportunity in that kind of space, and lots of other things in the energy transition space. There's a lot of old industries need to really transform themselves to be more energy efficient, and so there's big opportunities in climate to do that. There's the whole waste to value space. So we're talking about.
Does the inclusion piece remain?
That's a different debate altogether.
So this is from the climate perspective. That obviously, as the climate change predictions come true, they're going to disproportionately negatively affect low-income people living in low-lying areas and whatnot. Now, some of them would have a direct include, like the climate finance companies that are financing, say, 2-wheelers and 3-wheelers that are being used for business purposes, for delivery and transporting people and that kind of stuff. There's a direct inclusion piece, but typically we're very happy to finance things just because they reduce greenhouse gases.
Yeah, makes sense. Would you believe then the exit routes for some of these founders are going to be similar to what you've done for microfinance, or would you believe it would be maybe a strategic acquisition, but not an IPO, not a secondary sale, for, let's say for climate tech?
I think candidly time will tell. These are nascent business models. Most of the business models on the climate side are not yet proven. So I think that in those businesses, candidly, there's a lot more upside. So like if you look at this like battery energy storage company, this could, grow like massively, 100 times or something like that. Or it could fail, right? Like both outcomes are possible. We obviously are very confident in the team that it will succeed. So I think there's huge upside. That company could do an IPO. I think there are very big strategic opportunities there because there's so much money globally that's been committed to basically, not breaching this 1.5 degree increase in temperatures, and there's such massive commitments that have been made by both governments and corporates on the climate side. That's driving a lot of strategic money into the business. So I think that's a big opportunity.
So a lot of your Unitus' work in the next 5 years is going to be climate.
It is right now on all three of our businesses, and our investment bank, our NBFC, and our equity fund. Climate is the other big sector in addition to financial inclusion. And I think there will be exit opportunities on the private equity side as well. Every fund out there, or most funds out there, are getting some pressure from their limited partners to do more on the climate side. And a lot of them are nervous about it because the business models aren't proven yet. And so when I tell people we've invested in this company and they're already profitable, they're growing at 400%, they're like, please introduce me. I want to get in front of that company and potentially invest in the next round.
And I would want to end today's section of the actual material with what beyond equity debt, right? I have been a big fan on even understanding different instruments. Also met a lot of global examples where revenue-based financing, for example, is coming in India as well, but for mainstream sector. Returnable grants, not yet tried. Redeemable equity, not yet tried. Where do you think we are, Eric, in terms of actually, because you also kept saying less than 1% of entities would actually go to venture capital. That asset class is a different need altogether. May not work for impact enterprises. May not even work for good, profitable businesses, if you will, right? What instruments do you see coming in or are already being used but not yet regulated or talked about, which are beneficial to the for-profit space? I can start there and maybe I'll come to the non-profit.
Yeah, I mean, what I would say is that the basic instruments, equity and debt,
and grant
are so, and grants as well, are such big markets that you should try to find more ways to funnel people into that rather than coming up with a new product. And so I think what in the impact investing, social enterprise sector, what we really need to focus on is the basic things of like integrity, culture, and especially trust. In finance, trust is everything. And so rather than saying a new product, I think what we need to, where the innovation needs to happen and what could be really helpful and big would be for the financial services companies, especially the impact companies, to focus on the wealth management space. And so I think this idea of aligning your investments with your values resonates very strongly with individuals. Now, when you outsource the management of your capital to an institution, they freak out and think of all the risks of things involved. But if you approach someone at an individual level, they can say oh, this is a wonderful opportunity to invest in this climate solutions company or this inclusive finance company or this education, healthcare, other ventures. And so what I'd really like to see is the impact investment firms or even the mainstream firms set up private wealth teams that are focused on the impact side. Over time, that's going to be a massive business opportunity. And then those people can help funnel their wealthy clients who are interested into impact investment funds, impactful ventures, social enterprises, all of those things.
Interesting. So you're saying don't complicate where it's not needed to be complicated because there are enough instruments around.
Yeah, I mean, revenue-based financing, blended capital, those are fantastic. I just think that you can scale more like a wealth management platform, putting people into equity, debt, philanthropy, than you probably can by coming up with a new asset class or a new product.
Interesting. So you're saying that there is actually an opportunity to build such a wealth management platform.
Yes.
Catering to retail investors
Yes. Yeah.
and putting capital into impact.
Correct. Yeah. Retail meaning both through the
Institutional
retail mass market,
Yeah.
as well as the very wealthy people as well.
So eventually, a Zerodha or a Grow should have an option for impact investment.
Yeah.
Some of this applies for nonprofits as well, right? I've read like cases in US or Europe where a lot of financial instruments have been engineered to sort of cater to the needs of nonprofits. Like they in New York had a guarantee and then the bank could give a loan because the foundation would pay a year down the line. Another nonprofit was able to sort of buy out a building, rent the top 3 floors to actually, so that they can actually cover the EMI through the rental income. So these sort of things with, maybe help from the 2% BRI policy in US sort of helps create these instruments. I'm not seeing any such thing in India. And I mean, CSR adds a complication in terms of compliances and trying to nurture these instruments. We've had a query regarding the returnable grants, but I was like, I'm not going to go into that sort of a thing for incubation. But have you come across examples or have had experiences where you went and say, this is my nonprofit, we own a building, can you give me a loan?
In the Indian context, there are multiple dimensions that one need to understand. First and foremost, if I talk about from the user of a fund perspective, from a not-for-profit entity which raises mostly philanthropic funds or assets, I feel that the gap is massively, great, huge in terms of the responsibility, in terms of really giving the value of the money that has been given to us for a particular purpose, right? There is a sense of almost entitlement that you feel at many times that, I'm doing something which sounds like a charity,
Yeah.
or a noble thing. You should not question me beyond that.
Yeah.
And then that has led to a lot of mismanagement and bad name for the institution. And that is one of the key reasons why I was talking about the value that SSC brings in terms of these professional ethics into the play there, right? On the contrary of what you're talking about, that if an entity like ours has a massive setup where we would like to kind of use some of that as a part of our revenue generation part, we will have the people come and put a stop to it into saying that they are using their place for commercial purpose.
But I mean, if I as a nonprofit own a building, I can use it as a collateral, right?
So the challenge with most of the Indian setup is that many places are mixed use places, right?
Okay.
So if I have set up an office in a place, I have certain kind of a usage that is not there. For instance, I can't use it for a community gathering. So if I were to, for instance, give my hall off as a chaudhry or as a hall for social functions,
and seek rent on it.
then the neighbors will complain that they are creating.
Well, that's fine. That's let's say nuance, geography nuance, right?
So that is the part of the Indian context that I'm saying, that there's so much of mixed use that happens. So some of these kind of a thing do not really happen for us.
Okay, 3 skills social entrepreneurs must build for fundraising.
You must have thick skin because you're going to get a lot of no's. I think you really need to listen well to know your audience and what they want, because if you're talking to the wrong person, it doesn't matter how much. And your ability to successfully fundraise has more to do with the other person than it does for you. So I'll leave it at 2. I think those are the 2 things.
Awesome. Sandeep, 2 or 3 things technology can change in daily ops for nonprofits.
certainly leaves a very nice truth trail for the activities that is happening on that. And the second one would possibly be access, right? Especially because of the smart devices and all reaching out to the place. It just makes it so much more easy and exciting for reaching a larger audience. So access and the trail.
And what's, let's say, one technology that would completely transform non-profit ops in the next 5 years?
I think it would be very, very, overused and overhyped tech in many ways, but AI is certainly going to be primarily because of the cost efficiency that it brings.
Give me one or two quick examples of how it can.
Simple thing like creating scenarios for yourself in terms of what would create what kind of impact, what kind of assumptions need to be made for improving those impact, creating simulations out of that, bringing in factors that you were missing out in terms of designing your whole part itself. Or even for that matter, writing letter for grants. And
yeah, proposal writing, right? We actually have a venture which is called AI for NGOs. Yeah. Okay. Great. Back to you, Eric. Okay, this is one of my favorite questions, anti-portfolio. What's one investment that you passed on that you now regret? Probably is a missed opportunity for Unitus.
Oh, wow. I mean, there's so many great companies that are out there that we wish we were involved in. I think a very good one is Aptus Affordable Housing Finance. It was one that we were quite keen to work with early days, and candidly, they were so successful on the fundraising side. They didn't really need our help, and Anandan and the team that grew that so well. I wish we had played a catalytic role in that company. My partner Mona did in her role at Caspian, but we didn't have the privilege of doing so at Unitus Capital.
Name an enterprise that seemed perfect on paper but failed later. Sorry, I didn't prepare you for these.
No, no problem. There was a company quite a while ago that was doing micro insurance called IIM, and so they partnered with John Lakshmi and a number of other microfinance companies, and then they would staple their insurance product onto all of these microfinance loans. But where they got into trouble was that their product had a very long life, and the microfinance loan has a 2-year or shorter life. And so those clients were repaying their loan, moving on with their life, but still had this obligation to continue to pay their insurance. And so that kind of, LTM mismatch, that mismatch on the timing side, ended up dooming this company.
Do you document these, anti-portfolio that you missed?
We don't, because we will eventually for our UC Empower Fund. We've just started making investments. So I think over time we will do that. We've so far, knock on wood, our companies are thriving. Some of them inevitably will fail. And we'll miss out on.
Even if obviously your portfolio will be doing good, but there will be I think, I've not seen any VC in India actually have an anti-portfolio, whereas Decimir has detailed case studies on what happened in those meetings on the ones that we missed, right? I think, although they have the Dropbox and LinkedIn in their portfolio, they have Airbnb and Apple in their anti-portfolio, and they actually mentioned what happened in those meetings.
Yeah. I know I've been invited to some of these open mic nights where you go up and talk about your failures and that kind of thing. So there's a little bit of that happening here in Bangalore.
Great. Randhir, share an example from your mentor role, right? You saw a social enterprise that was showing promise, but eventually didn't make it, and if you can actually narrow down on what were the warning signs that you saw that was promising but didn't make it later.
Very, very interesting. So,
I'll limit you whether you want to name the entrepreneur or the venture or
the
not.
kind of enterprises that we come across through NSRCEL is very early, and therefore the mortality is really very high. So there are more chances that they will not succeed in that. But what really caught my attention is a slightly different interpretation of that, into saying that it seemed like it is never going to take off, but the entrepreneur just didn't give in.
Eric, one regulation that India needs now for the impact sector.
Priority sector lending for climate.
How about you?
Enacting Social Enterprise Act.
Got it. Eric, one founder you met that truly impressed you in the first meeting itself.
I mean, there's so many amazing founders in India, especially in the impact space. One I would say is Pavitra YS, who founded Vindia, an amazing company. It's a business process outsourcing company that employs primarily differently abled people. So like the language in their office is sign language because they have a number of deaf employees.
Randhir?
Oh, there's so many again. So, especially because I have some deep connection with the whole Marwari community. They're so big in our entrepreneurship. So, there's so many of them that I have interacted with them. No formal background, no formal education. Been doing things for years together.
All right, back to you, Eric. One founder trait that's an instant no for you.
Untrustworthy.
Randhir?
Not open to listening.
All right, last question, Eric. Will India ever have a $1 billion valuation social enterprise?
Oh, we already did have multiple of them.
Yeah?
I mean, you have companies like Aptus, Affordable Housing Finance, Bandhan has gone through there. You could argue like Narayan Kridalia, Devi Shetty's company, which serves so many low-income
So it's a
people.
social unicorn already. Let me flip this to you. Will there ever be a social enterprise, or is there already one which is impacting 1 billion lives?
There are a few of them internationally for sure, right? In the Indian context, we will get there because just as we're seeing the growth of Unnati today, the way that we have taken off right now, we are talking about 200,000. We are talking about 1 million in the decade. Possibly 1 billion can also happen in that sense.
Awesome. All right, Eric and Randhir, thank you so much for joining us. We had wonderful conversations about what's difficult about fundraising, what's happening in the markets right now, and what could be the future. So thank you so much to be sort of open about what's the truth out there, the ecosystem, and giving us those insights. And definitely would love to interact and learn more later. Yeah, thank you for coming.
It's a pleasure. Thank you, Nachi.
Thank you.
Yeah, thank you.
Eric. Lovely points. A lot of learning for me too here.
Yeah, for sure for me also.
Thank you.
Joining us in the next episode are Harish Hande, co-founder of Selco Foundation, and Nagaraja Prakasam, angel investor and resident mentor at NSRCEL.